Thank you for listening to the Lending Thoughts podcast sponsored by Rocket Pro. Today, I'm excited to be joined by my friend Scott Larter. Scott and I talk about the perfect career path into the roles that he has today, as far as I can tell. We talk about the importance of data in the mortgage and insurance industries when it comes to lending on properties. And Scott talks about how you as a mortgage broker can leverage data to provide a better client experience. You're not going to want to miss this episode. Scott, thank you for joining me today.
Thanks for having me. Appreciate the time.
Absolutely. So, Scott, can we jump in by you telling us your life story in 60 seconds or less, please?
Oh my goodness. Okay, yeah. 60 seconds. So I grew up just north of Toronto in a place called Aurora. Spent my days playing hockey and golfing all summer. That was a big passion for me. Was a lot of time spent on the golf course, which kept me out of trouble, which was great. Ended up going to school down in the States on a golf scholarship. Did 1 year in Florida, 3 years in Colorado, and found myself with a Bachelor of Science in Finance. Wanted to be a stockbroker, if you can believe it. Got out of university and turned pro for a couple of years in golf and, got into the bar world, bartending for a few years, which was great because you could bartend at night and play golf all day. And that was my job for a few years anyways. Got into sales working for Rogers, which is a telecom company, as you know, here in Canada, selling BlackBerries to small and medium business. Made a few changes through my sales career. And about 12 years ago, I started working for Opta Information Intelligence, which is a company I work for now, which sells property data, risk analytics, valuations, AVMs, all sorts of stuff at the property level. We got into a partnership with First Canadian Title back in 2020, where we combined data sets to build products for mortgage brokers, lenders, appraisers, real estate agents, really anyone that needed access to information, where I've been, working for both FCT and Opta now for about 4 years. I know that's confusing. Whether you're thinking Opta or FCT, it's really the same data source. It's just one product that I'm selling through a couple of different channels. And then recently started a startup about 6 months ago. I didn't have enough to do.
Yeah.
I started a startup about 6 months ago called BrokerBot, which uses AVMs or market values for lead generation, lead conversion, and customer engagement by sending updated market values on a monthly basis on behalf of mortgage brokers, lenders, real estate agents, so on and so forth. So I think that was probably 70 seconds, but there you go. That gives you the Coles notes anyway.
Very cool. So Florida and Colorado are two not bad places to golf if you like to golf. So if you're going to take some scholarships to go play in the States, those are some pretty sweet courses. So cool.
Can't complain. Was happy to be there.
Yeah, very cool. What got you out of stockbrokering then? Because you're like, hey, that was the idea. What was the pivot? You said, want to be a stockbroker, ended up working at bars, which, by the way, is great for communication skills, for the record, if you're going to eventually find your way into sales. Some of the best people we've ever
100%
brought into the company. They're former bartenders.
I wanted to get into being a stockbroker because of a few movies. You see the Wall Streets, you see the Boiler Rooms, and that scene with Ben Affleck when he gets in front of all those junior brokers in training and just rhymes off what was one of the best little scenes. I mean, that scene alone was I think I knew I was going to be in sales. I just didn't know in what industry. And, when you're in sales, you're trying to think about, well, where can I make money? Where are areas that I've seen other people make money? And, being from Aurora, which is a pretty affluent area, there was a lot of stockbrokers or people that worked in finance that both played at our golf course and were in the community. So that to me was something that I saw around me and seemed like everybody was successful in it at the time. So, got out of school with a Bachelor of Science down in the States. It's Bachelor of Science in Finance, minored in economics, but wanted to give golf a go. So I took a few years before I got into stockbrokering because I wanted to give that golf thing a try. And, you could bartend at night, which again works on a lot of skills that I think you need in business. And then, by the time I decided it was time to give it a shot, I was making enough money bartending. When you're bartending, you're making, depending on the type of bar, you're making 50, 60, 70 grand a year. And a guy in their mid 20s golfing all day, trying to make it as a golf pro and making cash at night, still seeing your friends, it was really appealing. So, you go in and you start interviewing. The jobs that were available for somebody like me was really picking up the phone and cold calling. And the starting rate was $28,000 a year. And you'd be in the office from, 8 a.m. until 8 p.m. dialing for dollars, about 200 people a day. So at that point, I decided, maybe there's other ways that I can make money, because I had had a taste of making more than that. And I think I wanted to figure out a way to keep going. But I mean, anyone who's been in the bar industry for a long time, there comes a time when you've just had enough. You're missing enough family events, every night. It feels like Groundhog Day, where you're running tabs and pouring pints. And as much fun as that is. So then I decided, what's similar is commercial real estate. So I decided to leave the bar industry and try my hand at dialing for dollars in commercial real estate. And that was in 2008. And if anyone remembers 2008, this global crash occurred, which probably wasn't the best time for me to get into commercial real estate, but, was still pounding the phones 100 dials a day, oftentimes 100 no's a day. Sometimes you get 99 no's a day. But if there was any sort of comfort zone that I was lacking in picking up the phone after my 6-month stint of working in commercial real estate, that was certainly behind me. So from there, kept honing my sales craft and getting into a position where I am today. Hope that helps.
It helps so much, and it actually helps me understand so much about you, which is why I like to start there. I mean, if I were to be giving career advice to a young person, it would almost sound exactly like the path that you took, which is go away to school, try to be a part of a team. If it's sports, fantastic, but could be other things as well, because I think there are so many lessons to be gained from that. Get into the bar industry in some way, shape, or form to learn the importance of communication. Get into cold calling to learn the importance of just being told no and losing, and day after day being able to show up and take that and just have that skill. And then try some different things until you find the thing where you could start applying those various skills. But it's amazing that all of that has led you to where you are today, which is leading sales for both Opta and FCT and running a startup. Maybe we'll start on the Opta piece, because in some ways it sort of underlies a lot of what you do, which is really data sales in the Canadian industry. And I think from talking to you in the past, it's not just mortgage, it's insurance. At the end of the day, it's real estate, it's housing data. So can you explain a little bit more about what that data allows the industry to do?
Sure. So at Opta, we started in the insurance industry. So, I think when you look at data and you look at the models that you can build off data, there's so many different things that you can do. But in the insurance world, we built a database leveraging claims and leveraging home inspections that we had done since the mid-'80s. So the database that we built was based on people going inside homes and capturing information, in which we built all sorts of different algorithms to build off that. Homes within close proximity often share similar construction features. We started going and buying a lot of third-party data. And today, what Opta would be considered is a property data aggregator. We own a lot of the data of ourselves, but we're also going out in the market and finding little nuggets of information that we can resell and use as part of our data dictionary or data lake. There's a number of different ways of putting it. But, what we have today is a database of about 18 million residential properties across the country, which hovers over 95%. We don't do as much in Nunavut, Northwest Territories, and Yukon. But when you look at the population from Vancouver Island across to St. John's, Newfoundland, we're the only data provider that has a consistent, accurate data set that, whoever the user is can rely on to make faster decisions without increasing risk. So on the insurance side of things, pretty much every residential home insurance quote you do in Canada likely touches our data one way or another. So whether you're going to an online insurance quoter where you're asked what your address is, you type it in, we're populating all of the data about that property right in front of the homeowner or in front of the call center agent or whoever it might be. So the idea there was, when you think back a year and a half ago, and I know you're from the States, so may go further back because obviously data has been a little more available before that. But to get an insurance quote 10 years ago, 12 years ago, 15 years ago, To get one quote, you'd be on the phone or at your local State Farm agent or whoever it was, and you would spend an hour and a half with them, and they would be asking all sorts of questions about your house. And in some cases, you know the answer, but most people don't know the actual year built of their own home. They don't know the actual square footage. Do you include the basement? Do you not? How many bedrooms and bathrooms? We think people know if their basement's finished or not. But there's a lot of really important information that you gather during that process that the homeowner may know, but in most cases doesn't. So the use case there was to provide a much cleaner customer experience because it shows right away the insurance company was credible because they've got all their information in front of them. And a lot of insurance companies today are pretty dynamic in the way they ask questions. So if they feel you're riskier for, something like
water backup,
your sewer backup or whatever it might be, they're going to ask you questions based on the profile they know in their home. But 15 years ago, it would be what's the percentage of hardwood to carpet to tile in your home? They'd ask you to look out the front window. Can you see a hydrant? How far are you from the closest fire hall? Like, that's all data now. You give me an address and I tell you everything in sub 2 seconds, 99.9% of the time. So, regardless of where you go in Canada, to get a home insurance quote, we're the data source being used. And in the background, what the homeowner isn't seeing in insurance, it's not about market value because we all know, in the lending world, it's about market value. In the insurance world, it's about rebuild cost. So if this house were to burn to the ground, what would it cost to rebuild it? That is what they are trying to figure out. And any Canadian that wants to look on their Coverage A tells you roughly how much it would cost to rebuild the house. So fast forward to today, you can get a fully bound insurance policy on many online experiences. That's 3 minutes. They ask you 4 questions and everything is done. You're a fully bound insurance policy. Some people do it in the auto dealership when they pick up their car right in front of the finance manager. Oh yeah, here's my policy. They do it in the waiting room. So the experience on the insurance side has come so far. I'm not going to take all the blame because of data, but technology's come a long way. A lot of the policy management systems available have come a long way. The data's come a long way, both about the homeowner, the driver, the property itself. But I think risk tolerance has come a long way. The reason why they asked all those questions was because they were trying to avoid risk. Today, they're able to make faster decisions that may be more expensive. When you look at the average insurance policy, the cost of acquisition, they're not profitable on that into the second or even third year. But they know that in the insurance world, 90% of the time, people are going to renew. And if they're not a profitable customer, their prices are going to go up and they're probably going to have to go elsewhere anyway. So it's almost buying the market to then solve it later. It's a little different in the lending world, obviously, because 5-year renewals are longer terms than that. But, that's just one use case in the insurance world of how insurance improved the quoting world, the underwriting world, the risk world, and provides a much better, much cleaner customer experience today.
Yeah, that's a really helpful definition, I would say, that helps us understand how that data is used. So one way to think about that, what I'm hearing you say, is that we actually have more information than we used to get from the consumer, despite the fact that the consumer would spend hours trying to give us that information. It's a much better experience, creates a much faster transaction. Obviously, being that we are in mortgage, Scott, I am curious to hear from you. Why is lending further down the path in terms of client experience? Why are we not able to deliver that lending experience as fast as the insurance?
To provide a rocket mortgage? Is that where you're trying to get to?
I would love to provide the rocket mortgage that is one day, getting it done really fast. And it sounds like you have the data to do it. So why aren't we there? And maybe talk about some of the things that need to happen in your mind.
Sure. Talking about, we primarily focused on insurance for a long time. And back in 2018, when we decided to make the move over into financial services, I was excited about it. I had previously been on the sales side of the insurance world. My wife's a real estate agent here in Toronto. We were avid home flippers, in the beaches area of Toronto for a number of years before we had kids. It excited me because I knew how much easier it was starting to get an insurance policy. And yet every time it was time to get a mortgage or time to close on a property or, refinance or pull equity, whatever it was, there was so many different steps that you had to go through. And oftentimes it was not a great experience. So I put my hand up very quickly here at Opta and I said, I think I understand some of the challenges. Let me dive in on this. And they welcomed that. So, immediately where we had success in the Opta world on the insurance side was not selling to one insurance broker at a time. It was, not selling to one user at a time. It was finding platforms where we could easily fit in or easily enable that platform to be a reseller. And very similar to where we started in insurance, we went with insurance brokers, which was insurance broker platforms. So there's a number of those, very similar to the lending world. There's about 4 or 5 of them that cover pretty much the market share. So in Canada, did a similar approach and started looking at all the POS systems that were out in the market, and some being more advanced than others. Some had models that they would charge the broker or charge the user versus others that don't charge the user, and they would get their money later on a funded deal. It was a big learning curve. Like, there was a lot of difference between the two industries that I needed to learn. It wasn't just turning on data and you get a mortgage like that, which one day I hope we get there. But the risk tolerances, I think, on the lending side, a lot more steps involved, a lot more people involved, and a lot less systems seem to be involved. Now, that's changed over the years as well. But I think when all these new technologies, POS systems pushing the envelope on things that they can do, providing a better homeowner experience, a better broker experience, a better lender experience. A few loan origination systems have popped up that do give, Fundmore to be an example, plumb data in there, and it provides a more efficient underwriting process through that. The appraisal process, the legal process, and then everything needs to be almost perfect for that mortgage to close. So I look at the two industries and why they're so similar. It seems like there's gates to get through. There's a lot more process and approvals and check marks that you need on the lending side that you don't necessarily need on the insurance side. And when I think about the risk profile of an insurance policy versus a mortgage, the insurance company is on the hook for the entire home. If it were to burn to the ground, what would it cost to rebuild it? Liability. There's all sorts of stuff that goes with an insurance policy where the lender was on the hook for, the difference between what the homeowner had put down and what the house was worth in case, it needed to be sold. So I always thought there was more risk involved on an insurance policy, and was shocked to see that there's less process to onboard one versus the other. And even though I got into this industry in 2018, I feel like I'm learning every single day. And, you uncover new challenges and new goals that companies have, and new fintechs and prop techs coming in trying to solve different problems. We're just trying to position our data as a easy API to connect to, a consistent data source across multiple channels. I want to provide consistency, whether you're marketing, filling out a mortgage application, pre-approvals, underwriting, appraisal, even into the mortgage insurance world. That to me is where the opportunity of improving a lot of this is having consistent data sources that you can rely on that aren't causing speed bumps throughout your process. And then that's when technology and efficient workflows and underwriting and all the things that are a well-oiled machine, assuming there isn't roadblocks and speed bumps through that process. And I think data is a big portion of that.
Absolutely agree. So maybe for explanation in layman's terms regarding AVMs,
Sure.
which are something that most of us in the industry are a very big fan of and are always seeking, and players like Opta make that possible. But down at the ground level, what is an AVM? How does Opta support lenders and insurers and such in obtaining those AVMs such that we can feel comfortable lending on properties without the need for a full appraisal? Mm-hmm. And then my second question to that would be, like, when do you think a full appraisal is needed versus an AVM?
So for those of you that don't know what AVM even stands for, it's an automated valuation model. So, it's a model. It's a data science driven model that takes into consideration a bunch of information about the property you're looking at, the properties in the neighborhood, the selling experience. I mean, for those that aren't familiar with AVMs, Zillow is popular with the Zestimate. That is an AVM that they use to generate leads for real estate agents. In Canada, there is 5 or 6 institutional level AVMs that are being used by the lending community. Some of those are provincial in nature. Some of them, handle multiple provinces. Some are national in the delivery of that valuation. But, an AVM relies on a lot of data, machine learning, data science, all the buzzwords that you can say on the data science side. But you need to know enough about the property. You need to know enough about the neighboring properties within the area. And you need to have a steady source for real estate information. And by real estate information, I mean real estate sales. Because similar to what an appraiser does, an appraiser will go into a home, they'll measure, they'll collect information, how many bedrooms, how many bathrooms, total square feet, is the basement finished, so on and so forth. Lot size, how many car garage, does it have a pool, does it back onto the water? There's all these things that they take into consideration. And then they go and they look, okay, what are all the other houses in this neighborhood that have sold over the last little while that are comparable? So are they similar? Are they 2,500 square feet? Do they have that 2-car garage? Do they have a pool? They make some adjustments based on that. A data science model is very similar. If you have enough information about the properties, if you have enough information about the sales experience in that neighborhood, you're able to put a pretty accurate valuation on that property based on the information that you have. When you look at the performance of AVMs over the last 10 years, which they've become more and more popular, they continue getting better. And that's because of data. Our AI and algorithms are getting that much more efficient and accurate in the way they do things. But, typically you see AVMs are within 15, 20% of the actual sale price of a home. You'll see that, between 75 and 90% of the time. That's kind of the acceptable range, is 15, 75, within 15%, 75% of the time. And then, it grows from there. Some are more accurate than that. But I think, again, you have to go back to, you need a steady source of real estate information to be able to put an AVM together. I look at an AVM as like a recipe. Anyone that's cooked in the kitchen, you may go to Italy and just have the most wonderful meal you've ever had, and you ask them for the recipe, they give it to you. You come back here, you go and you buy the same ingredients from your local grocery store, and it just doesn't taste the same. I think you need the ingredients to spit out the best possible recipe. And that's the one strength that Opta has, having the ability to have all of that data right across the country and having access to it dating back to the mid-'80s when we started inspecting homes. The next piece of your question there is, when is it good to use an AVM versus a full appraisal? AVMs have other use cases than just, an alternative to an appraisal. It can be used in lead generation. I think going back to that Zillow, the Zestimate, that they use an AVM to generate leads and update home values for homeowners. AVMs can be used by mortgage brokers to see what the approximate value is so that you can coach the homeowner through what their house is actually worth. Because a lot of homeowners think their house is worth what it was in 2001 when the boom was going on, when the reality is the market has shifted. So there's a lot of different ways and a lot of different flavors of AVM on how you can use it, whether it's for marketing, for sales. Now, in going into an institutional AVM, an AVM by itself is an uninsured product. It is just based on all the information we've got. Here is the value we have on the property. Sometimes they have a confidence rating of high, medium, and low. There's a couple different things that go with that. But I think throughout the years, appraisals have been ordered because it relies on a professional that has access to a lot of information, that can go out and put eyes on a property. They can see the condition of the home. They can take a look at the finishes, the marble, the wine cellars. Think about how far basements have come in the last few years. They're full extensions of our home. I'm dating myself here, but remember back in the late 80s when I was a young teenager, it was just panel boarding. You'd have the cheapest carpet possible, or still concrete. It was
your ball hockey arena.
100% it was. And Sidney Crosby became who he is because he was shooting pucks at his dryer. Back then, basements were $125 a square foot to build out. They were dungeons. You would just send your teenage kids down there because you didn't want to look at them or hear them. Now you've got full marble bathrooms and bars and wine cellars. So, it takes a professional to go into a house and look at everything about the house and not just data, not just, the year built, the square footage, those ingredients that I talked about earlier. So, looking at where we are today in the whole when do I use an AVM and when do I use an appraisal, I don't think there'll ever be a world that will be 100% appraisals. I don't think there'll ever be a world where it's 100% AVMs. There are so many different factors that come into that. And one of that is the risk tolerance of the lender. So private lenders, their boards want everything appraised 100% because that's a risk that they're not willing to take. Usually in a private lender, the borrower might be a little bit more on the risky side, whether the house is a little different, whether their credit score is poor, whether it's a bad market, like there's a number of factors that go into it. So, those properties that don't have those comparables or they're more rural and you have to go 2 kilometers away to find the nearest comparable. AVMs aren't going to perform at their peak in that sort of a scenario. They love cookie cutter. They love when every property in the neighborhood is similar in nature. That's when they perform at their best. So if I'm a lender, I'm trying to figure out at what point do I set my risk threshold to go full appraisal versus an AVM. There's also the insured AVM. The insured AVM is provided by usually an insurance company or an insurance broker that will take that value that the AVM spits out and they'll put an insurance policy on it. So that insurance policy will cover the bank in case there's any sort of loss. And, banks love to transfer risk. That is one way that they can transfer risk is through an insurance policy on top of an AVM. But an insured AVM, you need the perfect scenario for an eligibility. You need a favorable loan to value. You need a high credit score. You need an AVM that performs well on that property in that neighborhood. There's so many things that come into play that need to be, check marks in order to get an insured AVM eligible. And in that case, it's an instant SLA approved. That's how fast it can be. The next wave is hybrid products that take the data, the AVMs, the comps, the information that's required, and you put all of that in front of the appraiser. And based on the information that they see in front of them, they approve a value. That's another form that you can either get just signed by an appraiser or you can get an insurance policy added on top of that. So there's different levels of AVMs. There's different levels of appraisals. You can drive-bys. You can do a full appraisal. There's an appraisal app where you're taking pictures or asking the homeowner to do those things. So, I think if I'm providing any sort of feedback to the lending community, you got to look at yourself and say, what's my risk tolerance? And number 2, what's the cascade of things that I want to look at? Is it if an insured AVM is available, I want that. If it's a desktop, because I know it's a 4-hour SLA, I want that. Is it always full appraisals? Is it drive-bys? How often am I doing them? Because a house that you brought on 4 years ago, you're about to renew, what do you do there? Is it another full appraisal? Is it pulling AVMs? Like, there's a lot of different ways that those 2 products and the cascading products in between can be used. And, no 2 lenders are doing the same thing at this point across the country. I hope that answers your question.
It does in many ways. In fact, side story, just on a personal level, the last time my house was appraised was actually during the lockdowns in like 2020, 2021 during COVID time. So no one was allowed in the house. And the way that they did it was the appraiser had to drive by my home and they took some outdoor photos, but they relied on me for all the indoor photos and sent me like a whole Word document with instructions of like, here's all the 30 things I need photographs of. And I'd actually like performed by, in some ways, my own appraisal on my house, like going around, doing all the things, showing all these various rooms and mechanical rooms and whatnot. It was a very interesting experience. And then they came back, they took all that information and then they provided the value on the home. It was really interesting. And I think it showed society's willingness to adapt to circumstances to try to figure out what's the best way that I can get a value of this home, given the circumstances that are at play right now. So when I think about AVMs and appraisals, I actually don't think about the 2 things as mutually exclusive, but rather things that can work together. And I think that the better that we can make these AVMs, the less work we could put on appraisals and less work we could put on appraisers as human beings. And we can actually help them do their jobs in a better way. Because if you talk to appraisers, they'll tell you like, we want that data. We want more information on a property that will actually help us better value these homes. And then we can deliver a better and a faster consumer experience. So you're right. It's not one or the other. It's both. Scott, I do have to tell you, you are one of the few people who can talk to me about appraisals and AVMs and actually get me excited such that I'm like, hey, like the world needs to hear about this. you're very passionate about the topic as well as the world of data and properties. Like, what is that drives or motivates you? Because this is, 18-year-old Scott did not say future Scott is going to be the guy who sells property data to the world. But what gets you out of bed every day to do this?
Sure. Well, I think if you're not passionate about what you're doing the wrong thing, first of all. So, I think nobody thought they would be in insurance as an 18-year-old. And I thought guys that sold data wore pocket protectors. And, sometimes I do. I don't have a pocket on this shirt. But I remember I got recruited to work for Opta. A good friend of mine who's a recruiter begged me to take the interview. And, the more I looked into the company, the more that I understood it. I'm like, okay, this sounds like an interesting role. VP of sales working for this insurance data company called Opta. I went in prepared, but I was going into that interview to do a favor for a buddy of mine. I was in that room for 45 minutes and left the room and called him and I said, I have to have that job. So I don't know what it is. I mean, Greg McCutcheon and Colin Smith are my two leaders at Opta, and they still are today. And they did a really good job getting me excited. But I just love the story that data tells, and the fact that we have a piece of software where any address across the country, I can plug in and see pictures of the home, all of the information about the property, how much it's worth, what permit they've pulled on the property, the rebuild costs, where their local fire department is, how likely are they to have a sewer backup. While that may sound nerdy to many, that is exciting to me. And whether it's the real estate world and the way that they're using data, or the insurance world, the House Sigmas of the world and all these new platforms that are coming out, I get really excited about data. I don't know what it is. Maybe it's because I'm 47 and my 18-year-old self wouldn't have loved it. But, going back to golf, like golf is an extremely analytical sport. You got to know how far you hit your 8-iron. You need to know how far you hit it in the wind. You need to know downwind, how much spin to put on it, when to use it. Oftentimes you're playing a golf course backwards. Where's the pin? Okay, if the pin's on the left side, I should hit it on the right. So being a golfer, I mean, everything in golf now is driven by data. Like, there's a whole industry built on the pros, what they're playing, what golf clubs they're playing. It's included in their marketing, spin, this driver gives you this much spin versus that, customization. So I guess with golf, I've always really been into data, but I'm a left brain guy. I always loved to draw. I always loved music. I was more of an artsy guy, and I try and approach that in selling, but with a very right brain thing, which is data. And it's maybe not necessarily one property at a time. It's the dashboard. It's the overall themes that you can get from data that talk about the book or talk about, marketing strategies or whatever it might be. But there's just something I get motivated about selling data. I don't know. I love it though.
I love it. I love it. And as you compare it to golf, you're right. That is such a healthy comparison to make. I guess the one difference is you don't want to walk up to your ball and chunk it 10 yards like you tend to do in golf sometimes.
Hey, you do that in sales too. Trust me.
I hear you. So I want to just ask you for a takeaway.
Sure.
Our audience is primarily the lending community and mortgage brokers. And as you think about the world of the mortgage broker, what is that one actual takeaway that you think that, they can learn from you, from Opta, from
Sure.
First Canadian Title, or FCT as it's known in the world? Side note, I hate acronyms for that reason. AVM, FCT, it's impossible to keep up. And now BrokerBot. Like, what should brokers take away from you?
The mortgage brokers that I've worked with, the platforms that we've integrated into, I think a lot of mortgage brokers look at data as an unnecessary cost, whether it costs a few bucks. And, there's a couple of different data providers where you can buy, data on a property, depending on where you're in the country. But, we've integrated into Newton Velocity and Scarlet Networks and a few others, and we have a few more that are coming. But the benefits to a mortgage broker is you're the trusted advisor. You're working with a homeowner that, whether this is another mortgage or their first mortgage or a refinance, they're coming to you for money for a reason. And if I'm trying to put myself as a salesperson in that trusted advisor role, I'd love to know more than less that I can bring to the table. So where data is extremely effective is give me the address of your home, They pump in that address, hit enter, and everything about the property pops up. Year built, square footage, bedrooms, bathrooms, pictures of the home, whatever that might be. That gives you the ability to walk the homeowner through their biggest asset, which is their home, something that they're extremely proud of. So one broker could just say, hey, I'm looking at your home. It was built in 1986. It's 2,500 square feet. Or, hey, looking at a picture of your home, what a beautiful property. Love the gardens. The third car garage, I have 4 hockey bags I'd love to stuff in there. Amazing. Pump them up, right?
Yeah.
You know, your house was built in 1986, 2,500 square feet. Looks here like you haven't finished your basement. Have you finished it? Oh, no, we finished it 6 months ago. Great. Let me just update that. So through that excitement of walking them through their biggest asset, you're actually validating any inaccuracies in the data. And every data provider is not going to be perfect 100% of the time. I tell that to people all the time. You know, we're putting what we know about the property and what we know about the neighborhood in front of you. We just ask that you do a quick validation process. Oftentimes, you're not going to have to touch anything, but if they finished their basement 6 months ago and we just don't know that yet, update that as you're having that conversation. And by the way, if they haven't finished their basement, but they're planning to finish their basement, you've just unlocked an opportunity, right? To then maybe refinance or provide a HELOC later. So these are things through data where you can learn more about not only their property, but you can learn about what their plans to do with that property. So after you've done that process, and oftentimes that integration will pre-fill your mortgage application for you. So it's not like you're having to copy and paste and bring it over. Now your mortgage app is done with an accurate address, accurate subject property data. And now what we're providing is a market value understanding of the property. Depending on where your deployment is, you could get a range or you could get a specific value. If I'm a mortgage broker, I'm not asking the homeowner, what's your house worth? And why I'm not doing that is I think many mortgage brokers, lenders, anyone that's been in this industry, if the declared value you put on the mortgage application is based on what the homeowner says, oftentimes it's inflated. And I'll use the example.
Personal pride. Yeah.
If my neighbor's house sold during COVID for 1.2 million, they don't have a finished basement, but I do. I'm going to think, well, their house sold 3 years ago for 1.2 million. I have a finished basement. Mine has to be by this point 1.5 million. So let's go with 1.5 million. Even if they're doing a HELOC and they have, loan to values, very small percentage, why are they trying to maximize that value even to one that's too high? So if we're giving the homeowner, or at least the mortgage broker, an idea of the value of the property, just like the property data, they can coach the homeowner through roughly what that value of the property is and give them a much better understanding of the true market value of today. So, hey, it looks here based on the profile of your home and the market in your neighborhood that your house is worth somewhere in the 1.5 million to 1.1 million. Can we start the process with that in mind? Sure. Okay, let's put 1.1 million in. So we put in 1.1 million. That mortgage application goes off to the underwriter. You've now provided the underwriter an accurate address, an accurate property data profile on the subject property for their application, and a much more accurate value of the home, in which case they can take that and make a much more educated decision. Many times, if the mortgage broker doesn't know something, they'll put in an asterisk. The most widely used postal code in all of the lending community in Canada happens to be Old St. Nick's HOH-OHO, if you didn't know. Many brokers pump in HOH-OHO or another postal code. Ask your underwriter how they feel about that, because I'm telling you what, that application is going to the bottom of the pile. They're sending an email back to you, and they're going to get back to that application when they have the time or when it comes to the top of the pile. So do yourself a favor, whether it's a couple bucks here, a couple bucks there, pull the data, pull some accurate information, and pull an accurate market value, because you're going to provide a better customer experience. You're going to get better reviews, a much more efficient workflow, and it's not going to waste your time. You can move on to the next one. You don't have to worry about that one that keeps coming back. Now, we go back to appraisals on this. Now you've got an accurate application with an accurate value. Remember that cascade of products that we talked about? The insured AVM, which is an instant SLA. You've got desktops, you've got drive-bys, you've got different flavors in that cascade. The only way that you're going to get that insured AVM, or one that is a faster SLA, is if all the data is correct. If the value is 1.5 million, but
Right.
the AVMs are coming back at 1.1, 1.2, you're automatically being sent to a full appraisal, which, looking at what's going to be going on next year with all the mortgage changes, I think Korea's calling for 5 or 6% increase in home sales. Cost of borrowing is coming down. So the appraisers, very similar to COVID, are going to be stretched for time again. And, I think at one point we were waiting a few days to a few weeks, depending on where you were in the country. Do yourself a favor, spend a few bucks and get that data accurate up front, because it's only going to provide a better experience for everybody through that whole piece. And mortgage brokers who rely heavily on Google reviews, these show up. You're saving the underwriter 5 minutes, 6 minutes. I talk to underwriting teams that use our data all the time. Do you know how much money 5 minutes is to an underwriter? It's worth a lot more than what you're paying for the data. That's my whole point. Sorry, passion again.
I think you said it so well that we land the plane right there, Scott, because that's motivating for everyone listening. So some great actionable takeaways for all of us, some great information. Even I learned some things, and I hope everyone learns some things from this episode. So thanks for being on with me, and we'll talk soon.
Sure. Thanks for having me, Beckham. Appreciate it.